Okay, so this is the income statement. I want you guys to draw income statement first. Yeah. Let me see what are the requirements, guys. Always see the requirements whenever you say you take a paper. Statement of profit or loss and other comprehensive income for the year ending 31st/3/2020. Statement of changes in equity. Go in this order. So first, profit and loss. Second, change in equity. Third, financial position. Okay, simple as that. So draw the format first. Okay, guys, it's a quite good time for you guys to copy this down. Then I'm going to take the second one. As per the order what they have requested, we'll go one by one, guys. Changes in equity. I'll give some time to do the notes. So you guys know how to copy changes in equity. So let me copy that from here. Few things I'm going to change in this. It's Vinegar PLC and the values. So I'll zoom a bit, guys. We have a good overview on what I'm doing. Let me have a quick look on do I have any general reserve and retained earnings. Have a returns, somehow it will come. Total comprehensive will also come. So I'll remove this too. I'll move on to the question. Let me see what have they given on change in equity. On the trial balance, they have given retained earnings. Yes. They have given stated capital ordinary shares. The evaluation, so general reserve is not given. So I'll have a look on what I have been shared. So in this sum, there's no general reserve, guys. I just watched now, so I'm going to delete this column. So you have ordinary shares, revaluation, reserves, and retained earnings in the sum. Now, so let's move on to the next format of the sum. So I'm going to copy the financial position, guys. So I'll put it in a new sheet and write it down as statement of financial position. I'm going to write Vinegar PLC. I'll erase everything. I'm not quite sure what will be there in this. So I think there's one more non-current asset, as I remember. So I'll keep some space for this here. And for inventory, other current assets, and cash, let it be as it is. Let me give another. No, it's okay. Traded capital is there. Ordinary share revaluation was there. Retained earnings was there. Lease credit and bank loan, not sure, but still I'll keep some space. Current liability, lease creditor, income tax liability will be there. Not sure about other payables will be there. So let me keep some space. I hope you guys can see this. The same thing which we did yesterday, but here the company's name and the years, the date changes. Yeah, you're right. 31st/3/2020. Change in equity also, I thought, I hope I have not changed the date. 2020. Then I'm going to draw one more thing. Property, plant, and equipment. Okay, so I'm going to copy property, plant, and equipment from the yesterday sheet. Yes. I'll take the note 3, guys, as property, plant, and equipment. Because I didn't see any income here, other income in the sum also. Anyway, so I'll move on. I just want to check what are the non-current assets the business is holding. Let me see a quick look. The business has land, buildings, motor vehicles, and office equipment. You see, there are four items: land, buildings, motor vehicles, and office equipment. So, land, buildings, motor vehicles, and office equipments. I love Excel sheet, guys. You know, it's very easy to copy and paste. But for you guys, I know it's very hard. So, guys, I hope you guys have taken change in equity. You guys have taken income statement, and you guys also have taken. Yeah. So I'm going to write the notes. So first, I'll keep it note one. Keep it blank. Then have note two. I'll keep it for income tax. Note three, I took property plant and equipment. Here you see. Note four, that's the right use of the asset. So for now, I'll keep it blank. Note five most probably will be other receivables. So I will keep it for that. And note six, yesterday we used it for payables. So other payables we'll use the same. Note 5, I'm going to write here other receivables. Any prepayments will be taken here. Also, we'll move on to the sum now. I have given you ample time period to copy this down. So I'm going to start the sum. I want you guys to focus. This sum, I'm not going to do it. I want you guys to attempt it, but I'm going to help you guys. Okay, so you'll go through a lot of questions when you guys are doing. I'm going to explain you everything. Whenever you guys have problem, you can ask me in chat. So I'm going to give you 45 minutes to attempt the sum. You can't take more than 45 minutes to do a company sum, but you might not finish it within 45 minutes if you are inexperienced, or you might not even complete the question if it is in 45 minutes because you might feel it difficult. But if you feel in that two ways, then of course you need to practice one thing. Second thing is you will know your potential where you stand when it comes to companies. That is the thing. This is today. I'm gonna self-analysis you where you stand in everything. When you guys learn one thing, if you really practice it, guys, then of course learning putting is not going to be hard. So I'm going to give you 45 minutes exactly to put these adjustments. So I'm going to explain you how this adjustment work. I'm going to say you where this adjustment will fall. So when I'm reading this, I'm going to explain you where it will come and where it will not come. If you guys complete, okay, so I'm saying that if you guys complete this entire stuff, okay, this company account, but you need to be true, guys. You know, you should not see the past paper. Promise on summarized trial balance of Vinegar PLC as at 31st 3 2020 is given below. They are given property plant and equipment carrying amount 49,500, right of use asset is 12,600, sales 79,500, cost of sales 51,300. Then we have trade receivables 5,400, trade payables 15,500, inventory as at 31st 3, which is the opening stock, 6,000, I mean not opening stock, closing stock 6,488, cash and cash equivalents 1,250, provision for claims 800. I'm on the right pages. Then we have stated ordinary shares 25,000, land revaluation reserve as at first 4 2019 3,500, return earnings as at first 4 2019 5,650, administrative expense payable, so something you need to pay which is accruals 300, administrative expenses 6,462, distribution cost 5,600, finance cost 1,900, other expenses 1,500, lease liability 12,600, income tax paid 1,250, provision for income tax is 400. The income tax adjustment is going to be the same way which we did yesterday. There's not a big change. So you need to know the same format. If you know the yesterday's format, it's going to be easy. As I said, you guys, after if you guys can record these sums in properly, almost in these sums in a proper manner, that itself is going to give you a lot of marks on your exams. So I want, even if you guys doesn't know, if you guys can put this value in certain areas and if you score it, like property plant equipment, you know the balance is where it comes, cost is where it comes. It can be wrong or right, but attempt it, guys. I want everyone to attempt it. If you once you have attempted it, I'll be giving you marks when I'll be teaching you with the marking scheme. I'll be teaching you how much marks for everything what you have done. So you can take a red pen and start marking with me. You be your own teacher. Self-analysis is always important when you're doing the sum. Now moving on to the particular area, I'm going to explain you one by one. I want you guys to consider as much as possible. After explaining, I'll be giving you a time to do it, and that is the 45 minutes time period. Before preparation of the financial statement for the year ending 31st 3 2020, adjustment have to be made for the following. The policy of the company is to measure cost of inventory using first in first out method. However, the cost of inventory as of 31st 3 2020 has been measured at weighted average cost method due to mistake, and that value has been accounted for. The cost of inventory as of 31st 3 2020 measured at FIFO method was rupees 6,750,000. Now here you might see here they are saying one particular thing. I want you guys to mark it down. You have 2020 paper. If not, just look here what I'm doing. The policy of the company is to measure the cost of inventory in FIFO. Okay, normally they used to do it FIFO. But unfortunately, here in this sum, they have calculated under weighted average cost, and it's a mistake. So now this is the value which should come into the books of account. But how much they have taken the value? They have taken a different value. What is the value they have taken? Let me show you. They have taken 6,488. Now this is not cost to NRV, guys. These are taken the wrong value. So you need to make the right value. So when you adjust the right value, what would happen to the sum? Okay, let me explain. I'm not gonna do it in the workings, but I'm gonna explain it. So if you guys are smart, you will get it. So now this 6,750,000 is the actual between difference between the 6,488,000, right? So you got 6,750. You got 6,488. So you might get a difference. What might be the difference? Give me a second, guys. You got 262 different. So now this 262 is the main adjustment. You need to know. You need to know where this 6,750 comes. Actually, you need to know where do I adjust this 262, which we did yesterday. So I want you guys to think a bit. They are given cost of sales here, so they have not given the opening stock purchase something there. They are already given the cost of sales. So you should where should this 262 applies? How you are going to record the 6,750? You need to think, guys. So I given the adjustment. So then we have the administrative expense for the year consisted of the following items: directors' remuneration 1,250,000, staff salaries 2,150,000, depreciation expense 2,225,000, audit fees 275,000, other administrative expenses 562,000. So then they are given certain expenses to you to understand these are the ways administrative expenses is made. Sometimes this is not the way it should be. It might be a bit different. So you need to be very much concerned about these data. Now these data can be to confuse you in exams. There's no much involvement in these data because whatever they are given might be wrong. So you need to correct these final values. So this is an additional item to confuse you. Actually, there's no touch between this. There are a few things like directors' remuneration changes, depreciation expenses changes, audit fees changes. These are the things which you can write it under the profit before tax expenses on note number 1 if the other income is not there. So then they have advertising fee for rupees 350,000 of the company has been paid by the director from his personal bank account. This amount has been reimbursed by the company and accounted in the director's remuneration by mistake. So they're saying in this salary 350,000 has been paid to director's remuneration because he has spent in advertisement. Normally, when you spend in advertisement, it can't be under director's remuneration first of all. So first, you need to remove this 350,000 out of this 1,250,000. That's the first thing you need to do. Second thing, what you need to do when you're doing this adjustment, you need to take this 350,000 as this is an advertisement fee. You need to take it under distribution cost. Listen to this very carefully. I'll be doing it again with the Excel, but I want you guys to listen because there is a student in this class who is going to finish this sum with me. Then we have the company has entered into a contract with customer on 1st 3rd 2020 to sell goods and provide maintenance services during the first 6 months after sales. The total consideration of the contract was 1,500,000, and of which 1 million relates to the sale of goods and the balance of the provision of maintenance services. The company sold all goods agreed in the contract on 31st 3 2020, and the total consideration of the contract was received in cash. The total amount has been accounted in the sales. So you need to understand one particular thing of this sum. Actually, they are saying that in 1,500,000, 1 million is related to sale, but 500,000 you will receive it in future. But you can't consider it as an income. The reason it is not still a sale, because they are only sold for, they have worked only for 6 months, so that 1 million should only be taken into sale. If they have taken, now they are saying that this entire thing has been taken into sale, which means the 500,000 should be removed from the sale and should be shown that this money should be received in future. So where do I show this value is a question many students need to know. So normally this 500 should be a value which you should receive, like which you have received in advance. This 1,500, now you must see the total consideration of contract was 1,500,000, and of which 1 million relates to the sale of goods and the balance of provision for maintenance services. So you got 1,500, but 500 you can't take it because you have not done the maintenance services. So you need to take only 1 million into sales, and that 500 should be excluded under current liability. Again, listen to this very carefully. Then we move on to the adjustment number 5. The following information relates to the property, plant, and equipment. All figures are given in thousands. Land 22,500, buildings 9,500, purchase during the current year 5,000, depreciation of the current year 725, accumulated depreciation 4,500, carrying amount they are given. So the same way I'm going to read motor vehicles 9,500, 6,000 the purchase during the year, depreciation for the current year 1,550, accumulated depreciation 3,500, carrying amount 12,000. Office equipment cost 7,500, dash there's no purchases, depreciation for the current year is 1,500, accumulated depreciation 2,500, carrying amount is 5,000. The land of the business was revalued for the first time on 31st 3 2016. The surplus results from this revaluation is represented by the land revaluation reserve. The land was revalued for the second time on 31st 3 2020 for rupees 18 million. However, it is not yet accounted for. So normally now your land has depreciated because the value was 22,500 on the beginning, but it has gone to 18,000. So actually you are losing 4,000 worth of land's value, 4,500. This is a deficit. Now you need to know how do we record this deficit, because they are saying that they have on the first of the particular year you got a revaluation amount. What is the revaluation amount you got? You had a revaluation. They're saying the surplus resulted. So first thing, you had a surplus when you had a revaluation. So let me move on to the question and see. Do you have a revaluation surplus? Of course you have. So 3,500 you have a surplus, but now you got a 4,500 deficit. So you need to remove this 3,500 from changes in equity completely. And if you remove this 4,500, you can't remove it because there's only 3,500 in under changes in equity. So after removing, you will have a balance of 1,000 deficit. That 1,000 deficit where you record it under other expenses, that 1,000, as well as you need to record this 4,500 under property, plant, and equipment, this deduction. So now I'm not going to explain you how deep I'm going to go. I'm just giving you the tips. If you guys know, you guys can work on it. The buildings and the motor vehicle have been purchased during the year on 1st 1st 2019 and 1st 1st 2020 respectively. However, the current year depreciation has been calculated erroneously based on the year in cost and of assets without considering the date of purchase. So actually they have taken this depreciation expense completely wrong. So we should make it correct. How do you do that? They are saying don't take the value, they don't take the total value and just complete for the particular year, but you need to see on the particular purchase month. Now you must see buildings were purchased on 1st 10 2019. So these buildings should be accounted separately, and motor vehicles was calculated 1st 1st 2020 only for 3 months. So this 6,000 should be calculated only for 3 months. This knowledge should be there to calculate how much depreciation for this particular 9,500, 9,500. So this 9,500 will be calculated on 5%. This 9,500 will be calculated on 10%, but this 5,000 will be calculated in 5%, but only for 6 months period, because it is from 1st 10 2019 to 31st 3 2019, 31st 3 2020, and this 10% of motor vehicles should be accounted for 6,000. 6,000 into 10% into 3/12, because this is 3 months you are taking motor vehicles, which is January, February, and March. Again, if you really know how to do it, you will do office equipment 20% depreciation charge. Very easy adjustment, guys. You can do it fast. The motor vehicles are used in distribution of goods and other assets are used for administrative activities. Then we have the verdict of a case filed by a customer against the company was declared on 15/5/2020, and accordingly rupees 550,000 was paid on this date as a full settlement of the claim. This case was filed on 1st 12/2019, and the provision recognized in this regard as at 31st 3/2020. Based on company's lawyer's opinion is shown in the trial balance. The financial statement of the company was authorized for issue of the board of directors on 15/6/2020. So here you might be able to understand that this person who is the who a customer has requested a compensation, and that is probable that will happen. That is surely that will happen because they are it is happening between a period of 20th 3rd 2020, and that is falling within that particular period. And the lawyers are saying that you need to calculate a provision and keep it. So they are calculating a provision. This 550,000, where do you calculate? Normally, you need to keep it in a few places. You need to record. One is to know how much they have allocated. Here they have only need to pay 550, but you need to do have they allocated anything more? They have allocated 800, but actually you got only 550. Actually, you are saving 250,000 claim. So that 250,000 claim, you can deduct it from the where do you deduct, guys? You can deduct it from the distribution expenses. No, give me a second. Yeah. So you can deduct it from the distribution expenses. Then, of course, you will be able to do the adjustment in a particular manner. You should not take under distribution expense. I'm sorry, guys. You need to take it under other expenses. Okay. So I given that knowledge also. And moving on to the next part. Then this 550 has not been paid because this will be issued on 15th. You need to pay, which means this 550,000 should be kept it as a current liability. Then we move on, same adjustment like yesterday we did. The company entered into a lease agreement on 1st 3rd 2020 to obtain a right of use of a building for a period of 4 years. So it's like almost like a leasing operating lease option only for 4 years. However, this building was available for use from 31st 3 2020 after spending 500,000 for renovation, capital expenditure. This renovation is expected to generate benefits to the company over the entire lease period. However, this amount has been accounted in the other administrative expenses. Lease interest, now this 500, do we take in the other administrative expenses? No, because it's a capital expenditure renovation, you can't take under other administrative. So you need to remove it. Lease interest is not charged during the renovation period. According to the agreement, an annual lease of 4,413,000 is payable from 31st 3 2021, and the lease interest applicable for the year is 1,890. So you need to find the current liability, and from the lease interest, you need to find the non-current liability. And you can find here, this is the lease liability you have taken. When you remove the current liability, you will be able to find the non-current liability. Then we move on to the next part. Income tax paid during the year includes 520,000 paid with respect to the previous year. Yesterday, we did the same adjustment. Income tax liability for the year ending has been estimated 650,000. And you can find this amount here, how much they have paid income tax, 1,250.